Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark will run down the action on the major equity markets. Institutional Advisors market historian Bob Hoye will give us some perspective on the recent rate hike by the U.S. Fed and how it will affect Canada. We'll ask if there's anything a little country like Canada can do when faced with actions from an economic giant. We also look ahead to Wednesday's Canadian federal budget. We'll learn about a relatively new organization, the Resource Works Society, that's promoting sustainable development in BC. Stewart Muir will explain how important that is for thousands of jobs across our nation. We'll talk to Ross Clark right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always enjoy being with you, Jim.
You're keeping an eye on interest rates. What's happening with them?
Well, this was the week we'd been waiting for, the Federal Open Market Committee meeting, a two-day affair, and at the end of it on Wednesday, the quarter-point increase as anticipated in terms of the move by the Fed on their Fed funds rate. So that's the third bump up now that we've had in rates in the last year and a bit. And the talk from following the meeting with Yellen and the interview was such that there seemed to be more dovish than it was originally thought. So the markets took that pretty well in terms of the equity market. It meant that interest rates may not be rising quite as much as people had thought, at least from the Fed. And that turned the dollar weak. We dropped about 1.5%, maybe 2% from the time of the announcement. The other side of the coin, gold market tacked on a good $30, closed off the week at $12.28. But if we take a look at the interest rate market itself, the bond market, there's some important things happening out there right now. The original move in December by the Fed to raise rates for the second time, we had the bond market moving dramatically from July, and following the election of Trump, that gained a lot of speed on the downside. And so we got some pretty good oversold readings in the bond market in November, December. And when the Fed made their move in December, rates had climbed up to about just over 3% on the 30-year bond and around 289 on the 20-year. Then they settled back here for this last couple of months, and on the announcement this week, we're basically back to the same rates that we had in the bond market in December. Not much higher, just by a hair, and we're backing off from there. And this, for us, is significant because when we look at markets that make a big move and become overbought or oversold, and then come back to retest that becomes our real litmus test. And as far as we can see, if rates manage to stay below the levels that we've seen in this last 3 months, markets should be in reasonable shape. If, however, we start to push through those by 10 or 15 basis points, then that's going to have much more of an impact. And typically by the time you've had 3 interest rate increases and you've been this overbought, the fourth one, whether it be in the open market or whether it's the Fed that's doing it, tends to have an impact across the board.
Ross, what's happening with the yield curve?
Well, when everybody looks at what happens on the difference between the various interest rates, whether it be short-term rates versus the long-term, and that would be the yield curve itself, or the credit spreads, which will be then the quality of the paper, say looking at high yield products versus treasury products. There's a couple of interesting things happening out here. The high yield items, so that would be the JNK or the HYG if you're looking at the ETFs, they became very overbought a couple of weeks ago. And typically, and this is in terms of those ETFs, which have been trading since early 2007, this was a rare event to be this overbought. And typically what happens is that you get a hard correction down, and they got down to their 50-week moving averages. You get a bounce, and then if they start to erode away again, then you can see that having a filter over into the equity markets. And usually once you've had that overbought in the high yield items, it's about 15 to 20 trading days after that you end up seeing in the highs in the equities. So that's into the window here in the coming weeks right now. The other thing is that the yield curve itself. Everybody gets concerned when the yield curve becomes very, very flat like it did in 2000 when it became, well, actually it inverted, and then again in 2006 when we saw it flattening out. What we've had recently is you've had a move in the 2-year versus the 20-year that's gone from about 330 a couple of years ago down to 1 in the last year. And so that flattening that's happening there, if it starts to roll over, that would be then the type of thing that we did see in the second half of 2000 and the early part of 08. So we want to be watching that yield curve very closely. I've written a paper on that. If anybody wants to see it, I'm more than happy to send it out to them.
Ross, when we start to see that change, is that a warning that the markets are about to go down?
Yeah, well, so typically what you would get after the high yield move, you'd be looking for about a 7% drop in the market. Now, we'd originally been thinking that first year presidential, following March, we get a 3 to 7% correction. We've had about not quite a 2%er off the highs right now and a bit of a bounce. I think you could still easily see that 3%. However, if it starts to give up ground, the 7% would be a very natural level, and that's what we've been seeing a lot of in the last few years. It would also then take us down to the 150-day moving average as far as the S&P and the Dow is concerned, and that, coincidentally, is about 7% off the highs. So that to us looks like it's probably worst case scenario and fairly probable example of what might happen between here and the summer.
Ross, thank you so much for being on This Week in Money.
Nice to be with you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. And if you'd like to get one of his charts, you can email him at ross.clark@cibc.ca. Coming up, Bob Hoye, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to This Week in Money, Bob.
Yeah, Jim, good to be with you.
All this fuss earlier in the week about the U.S. Fed raising its rate slightly, but it was the third rate hike in the U.S. in the last 8 or 9 years, so perhaps not a big deal, but people made a big deal out of it. Should they have, Bob?
Oh, no. The work we've done over a number of the big financial booms and contractions, like back to the 1870s, is that the pattern of the senior central bank, back then it was the Bank of England, and then more lately the Federal Reserve System, is that they follow changes in market rates of interest. So let's define that. First of all, market rates of interest are kind of like treasury bills at the short end. Used to be call money for overnight money, and then right out to 30-year bonds. And they trade not just day to day, but minute to minute. But then the central bankers get out there and, well, it's best to call what they do is the administered rate, like it's now called Fed funds. 100 years ago, it was the discount rate. So the history is that the senior central bank follows important changes of interest rates, either up or down. And that's with this case, because market rates of interest, whether at the short end with LIBOR, started to go up in June, and the same with the long-dated treasuries. And I saw a headline just the other day that it's been one of the nastiest decline in long-dated treasury bond prices in 40 years or something like that. So it's really quite something. So here you have it, and it gets rather elusive, is were market rates of interest going up because it was discounting a change by the central bank? The central bank always follows. So at the moment, it's following up. So here you have the absurdity this week. The Fed raises its rate. At the same time, they came out with a GDP number that was less than 1%. It was soft. So the way I looked at that the other day was that interest rates always go up in a boom, but the U.S. economy is not booming. Commodities are not booming. So where is the boom? Well, the boom has been in financial assets. And it's always the demand for speculative money that in a boom drives rates up. In this case, the speculative game is in financial assets or paper or whatever you want to call it. So, and these rates go up until it chokes off speculation. And that is a little difficult to project, but we figure it's not going to be that far away. So the central banks really are there. All they are is they're just along for the ride, and their art is to try and look like they're in charge of things while avoiding any responsibility for anything bad that goes wrong. It's been the biggest promotion in history, quite the scam. So I enjoy talking about it because it really is so nonsensical. And the boasting that goes with it is these guys really believe by fiddling with the interest rate when they're following the market and fiddling with the purchasing power of the currency that they can manage the economy. So you go back to the start of the Federal Reserve in 1914. At the time, the leading thinkers had this theory that if the Federal Reserve was to prevent financial distress, and became known as the lender of last resort. So if a bank was in distress, it would be there to bail it out, and then all would be fine. So, but here's the history. Prior to the start of the Federal Reserve, financial distress, interest rates go up, and then the recession. That's the way it works. So what's been happening since the imposition of the Fed, since 1914? There's been 19 recessions. So just straight up, according to the original intentions, it's not working. So here we are. These guys still have credibility. And, for example, in the top thinkers with the 1929 boom boasted that with the new and scientific Federal Reserve System, nothing could go wrong. And then you had the crash and the depression. And then in 2007, which we take as the boom was equivalent to the 1929 boom, and it was followed by the worst recession since the 1930s, which confirms that idea. Then you had one of the leading economists at Harvard, Greg Mankiw, in December 2007. His boast was that nothing could go wrong. And the reason why is because, in his using his own words, they had a dream team of economists at the Fed. Nothing go wrong? Sure. And then all of a sudden you come in with the worst contraction since the 1930s. So these guys are all front and no depth at all.
Bob, now, of course, Canada lives next door to this economic giant. They fiddle around with the rates a little bit. What can a little country like Canada do to protect itself or go along with this?
Absolutely nothing. The idea then of having sitting next door to the biggest solo economy in the world is absurd. Even the idea of changing interest rates for what the economy in Ontario may be doing, which is supposedly the industrial base, and that may not have anything to do with what resources are doing out west. So the notion of intrusive central banking with ideas to make the economy better don't even work in Canada. And of course, I've often thought, well, why should Canadians put up with currency depreciation when you know that the big brothers in the States will depreciate theirs anyway? So, no, the idea of having a national central bank makes no sense whatsoever. And, for example, in Canada here, the new administration in the States is concerned about NAFTA, and every right to be, because that was a trade agreement designed by bureaucrats for bureaucrats, and they allowed the central bankers in Canada and Mexico to depreciate the currency. So why have price agreements and trade agreements, and then the Canadian dollar, they drop it by 25%? That's a magnificent cheat. So anyways, it would be best to eliminate the Bank of Canada and just go to a straight currency board and have the Canadian dollar pegged at par with the U.S., and then that takes out a whole lot of friction and mystery in trade north and south. So, but I believe that there would be a time when more common sense prevails. I think that the popular uprising in the United States now really is a new bull market for common sense amongst the public, and it now has an executive with the president in the White House. He may be unpopular with the establishment, but then, and they sort of go on about his blunt ways. But even if he was polite like Reagan, the media would be working him over just as seriously, in case you had in Canada with Harper, who was intending to try and bring back the concept of limited government, and that was very unpopular with the establishment, so he was worked over without mercy, and yet he was polite. So my thesis on Trump is, even if he was a polite man, they'd be working him over the same, because he's trying to reduce the influence of authoritarians, and so far making some pretty good steps at it. So then the idea, go back to the question, is about whether Canada should have an independent central bank being next door to a huge country. No, it's ridiculous. And, of course, their theories are ridiculous. As I said, the theories of central banking can't even be applied in one country as big and geographically as Canada is. So, but we're in a period of time where many of the institutions in day life will be examined, and if it's too intrusive and nothing's coming from it, it's just a costly item, it'll be reduced or eliminated. So on this regard, Jim, we live in exciting times.
What would be the benefits to the average person if the Canadian dollar was pegged to the U.S.? It'd go back. One of the things that always bothers is you could have an identical car for sale in the States and for sale in Canada,
and it may even have been made in Canada, in Detroit, or in Windsor, it'd be 25% or so more expensive than in the U.S. And then one of the objectives of Harper was to try and bring down the cost of items at home relative to those costs to American citizens, and that's a worthwhile project. So on the notion that if you depreciate the Canadian dollar, it helps, say, export industries such as mining, well, why help one group over another? Then the other one is that, oh, well, it helps tourists. Well, why depreciate the dollar, raise the cost of buying things to ordinary citizens, so Americans can come to Canada at a cheaper basis? It's crazy. So, no, the best thing is a constant valued currency, and even having it pegged to the U.S. would introduce some constancy. It would still depend on what's going on with the U.S. dollar. But then we're in, after the bubble blew out in 2007, we're in a post-bubble contraction, where one of the features of all previous post-bubble contractions has been is that the senior currency becomes chronically strong against most other currencies and most other commodities for most of the time. And that then becomes a problem for those who have borrowed too many U.S. dollars, and you start having to pay back that debt in U.S. dollars into New York, and you then have to sell whatever in the markets in order to get your hands on U.S. dollars. So the huge debt bubble of the portion of it that was written and obliged in New York is in effect a huge short position of dollars. So we sort of see the U.S. dollar has been trending up since 2008, and we think it'll continue to trend up. And it'll be inconvenient, and it'll be an inconvenience to those who have assumed that all currencies are going to go down all of the time.
We'll have more with Bob Hoye next on This
I'm
Week
Larry
in
Ray,
Money.
President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Bob Hoye. He's a market historian who is the chief investment strategist for institutionaladvisors.com. Bob, the Canadian budget is coming up on Wednesday. There's always fears that they're going to boost taxes. One of the taxes that people have talked about is boosting the 50% capital gains tax to perhaps as high as 80%. Would that be a good move?
Oh, no, absolutely insane. As a matter of fact, it's malevolent because it is, the inspiration for economic innovation is to make some money. And one of the best ways to make money is by building an asset, a company, that grows and appreciates. So capital gains is really an intrusion into private life. And it also then is a constraint upon innovation, where the government takes the money because it thinks it can do better with it than innovators can do. So, capital gains. I was, trading pre-capital gains. When was that? 1972. And you have no idea how wonderful it was. You didn't even have to keep track of anything, and because you weren't going to get taxed on it. And then they come in with capital gains, and raising the rate would indeed be insane, because what Canada's going to have to face is that in the United States, I haven't seen any talk about capital gains, but I'm sure that would be part of a package of trying to get the tax rate down to, the target's 15%. But, about 15 years ago, there was a few studies floating around in the United States, where surveys were made of people from all kinds of different work employments and incomes and academics and everybody. And when they rounded it all out and concluded, the average of all of this was that 20% tax rate was considered ideal, and it shouldn't be much higher than that. So let's say they go to a 20% tax rate for corporations and individuals, plus a good amount for cost of living stuff for those who are not making so much money. Well, that would be rather good. And we all know that where, for example, in communist Europe, let's say the tax rate was 100%, whether you want to call that on income or capital gains, because that was not permitted. And what happened, the joke was with the average Russian worker was, oh, they pretend to pay us and we pretend to work. So not much was happening until the popular uprising that took down the Berlin Wall, and then economics and markets were quite refreshed after that. So no, it's more intrusion by the state, and it's increasing tax rates of any category in the face of U.S. lowering tax rates. You take industrialized Ontario, which happens to be next to Michigan, formerly industrialized, but then the unions laid waste to that. But at any rate, you look at, in Michigan, depressed land values, and then there's going to be tax cuts, and then there's going to be a reduction in regulatory intrusions. So that's going to make Michigan, Detroit, much more competitive than anything in Canada. And this is where I think that in Canada, the popular uprising could come from industrial union labor people in the southern Ontario, looking at the competition that will be developing in Michigan, and that is going to be fascinating to watch.
Well, when Ottawa cut corporate taxes in Canada, I think to 22%. In the U.S., it's much higher than that right now. Over 350 companies, the most notable Burger King, moved to Canada because of the more competitive tax rate. Would Ottawa be cutting off its nose to spite its face if it did boost taxes?
Oh, Ottawa doesn't have a nose anymore at all. They've been stupid for years. But no, never underestimate the stupidity of bureaucrats. When they get fixed on something, nothing can change it. And the only thing that one can do is you can never change the style of thinking of bureaucrats. But what you can do is make sure that they're a smaller portion of the pie in the whole economy of Canada. So, as I said, when you had communism, the government was 100% of everything. And if you got tax rates at 40 or 50%, which we have in Canada, if you take all forms of taxation, including municipal and et cetera, it just stultifies the economy, and it inhibits innovation and change. I mean, the modern economy arrived here because of innovation. And it was developed, of course, in England, which had a remarkable history of freedom. And then you had innovation, and then next, you had modern industry and modern world, and the prosperity and longevity that has never been recorded in the past in any other way. So, mind you, today's socialists hate a free market system, and I might say they hate it with ignorance. And but this is what we have, and it makes life really rather pleasant for most people in any country that has a degree of economic and political freedom. So to get back to this idea of raising capital gains tax, that's an intrusion on private life, and as any taxation is.
Some people have suggested Ottawa has no need to raise taxes at all. It just has to be more efficient at collecting the current taxes.
Oh, yeah, that's one probability you can clean it up. But then the other one is why not reduce the presence of bureaucrats in Ottawa and then reduce the overall tax load? And then, because, these guys live a pretty lush life. If you take a look at the popular uprisings in history, they've all had one theme, even going all the way back to ancient Egypt, where the governing classes were living well and promising wonderful things to their people, and then the people look at how well they're actually doing, and if you're in hardships, you're going to get a little restless, and then that's where, as they say, dynastic changes in ancient Egypt can be tied to reduced harvests in the Nile and hardship amongst the folks until they finally threw the upper classes out, the governing classes. And this, of course, is what happened in Eastern Europe in the late 1980s, when eventually the symbol of it all was when they tore down the Berlin Wall, and that popular uprising took on thugs with tanks and machine guns. The state then there did have the privilege of state murder, whereas here the popular uprising in the United States now, I doubt that the establishment would turn to state murder. So what the establishment has, as defined by the New York Times and the Washington Post, all they have is propaganda about how good the state is and how serious what the threats that the state sees. Like, unless it has a central bank, the economy is going to go all to hell. And unless you do certain things, the world's going to overheat and melt. So the audacity of these guys is amazing, where they think that they could actually manage the temperature of the earth. I mean, in any other period of time, this would be a laughable suggestion, but there are so many people earnest about it, mainly because the state derives huge power and wealth by going on about climate threats. So we're in a period of time when the general public is looking at how well the governing classes live and how good their promises are and how much of a good deal they got personally, and the equation is not going to come out in favor of the government. And as we say, this is the large propellant behind the change in the United States. And of course, in England, you've got Brexit, whereby the Brits were sitting there looking at a bureaucratic monster in Brussels that was unelected, unaccountable. So here they were, facing a remote and authoritarian government of which they had no influence. And then you move back in time to 1776 with the American Revolution, and what was their issue? A remote and tractable government in London, and these guys were in the eastern states and completely frustrated. So no wonder there was an uprising. It's too bad that it became a civil war. But at any rate, hopefully this uprising that's on now in the States will come to Canada, and hopefully be successful.
In England, I believe they have a taxation policy on small business that says we will not impose any taxes on you whatsoever until your business is profitable. Would that be a good policy for Canada?
Oh, yes. I don't know in detail what it is, but any taxation, taxation has been driven by the ambition of the state. So it's approaching levels that are intolerable to the citizens. And then that's been intolerable. Taxation has been intolerable for a long time. So this is why they then depreciate the currency, because that then transfers wealth to the state and is a terrible cheat. So this has been the case throughout history, where ambitious governments have no limitation. So then tax rates go to confiscation, and then they depreciate the currency. So, and this is what's been on for the last 100 years in it's now becoming intolerable. And I believe that the popular uprising that is got a toehold on things in the States will eventually be seen in Canada. And here, if you have the feds in Ottawa come up with a higher tax rate, even capital gains could be one of these things that push off a reaction, or let's call it an uprising. It's the establishment that has become reactionary against change that's coming from ordinary citizens. So if they do it, it's stupid, but if they do it, it may prompt a popular uprising in Canada.
Bob, thank you so much for being on This Week in Money.
Yeah, Jim, good to be with you, and look forward to next week.
My guest has been Bob Hoye. He's the Chief Investment Strategist for institutionaladvisors.com. Coming up, Stewart Muir next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Stewart Muir. He's the Executive Director of the ResourceWorks Society, the website resourceworks.com. Welcome to This Week in Money, Stewart.
Thank you, Jim.
Many of our listeners probably aren't very aware of the ResourceWorks Society. Can you tell us about it?
We've been around 3 years now. We came about because a number of people connected with the natural resource world had begun to see a trend evident in some polling that was done that people, especially in cities, aren't as aware of the foundational importance of the natural resource economy in BC in their lives, in their ordinary lives.
And just how much influence do natural resources have in our everyday lives?
Well, it depends on how you measure it. You know, Canada really is, in 2017, a resource economy. Probably about 22% of the GDP impact of the activities in our economy are linked right back to natural resources. If you look at some of the impacts of natural resource jobs in BC, a natural resource job is up to 6 times as high impact as a regular average job because of the exports that most natural resource-related work entails.
What kind of work does the society do?
Well, we wanted to start out by addressing some of the gaps in knowledge. So we've done research, economic research, also some social science research to understand attitudes. You know, why is it that a lot of people are hesitant or not willing to show their support for resource activities? We wanted to study that. We also wanted to talk about our findings and build a better conversation because we know that over time there's groups that are, I would just say, opposed to natural resource extraction who just want it to stop because they have got, beliefs that you can't have a resource economy and protect the environment at the same time. And, you know, I think there's a movement now to reject that, to say, look, we can have both. We've got professionals, we've got rules and regulations and laws that help us to do things. We've got technology, innovation that's letting us do this. Let's do the best job we can because, you know what, everything around us, you look around right now, everything is made of something that has to be created or mined or cut down or processed, and we're going to need those things in future. So we got to get to grips with how we do that properly.
How big of a battle is it to convince people you can exploit natural resources without ruining the environment?
You know, I think it's, I would like to shift away from the battle mode because I think a lot of what's happened over the last couple of decades has been based on a kind of confrontational approach on both sides. You know, really when you break it down though, it's maybe 1 person in 5 could be against a lot of that and 1 person in 5 could be strongly in favor. So that's 2 out of 5 or 40% of people who are opposed, you know, at those ends. But what I'm really focused on is the 60% or more who are in the middle, who are kind of confused. They want to have the good things in life, but they also want to respect the planet, respect the climate, and know that they can, ensure their parents are looked after well, that their kids are looked after well. We're the sandwich generation, and we got to have things working for us. And that's who we're aiming at with ResourceWorks.
What kind of programs does ResourceWorks have?
Well, we've brought together thought leaders. We had our Outlook 2017 conference back in December. We had thought leaders from forestry, mining, energy, First Nations, government, who we brought together in Vancouver just to share ideas and strategies about how we can be more successful in bringing about a calmer, more productive conversation on things. That's one example. We've had our events with our She Talks resources, where we're bringing together women, professional women, women in trades, entrepreneurs, who see the world from a particular point of view and want to have a place to talk about their issues. And I think that's really important as women become more important in the boardroom, in the C-suites, in professions and trades, because they have got particular barriers and concerns. And so we've provided a stage for that. And then, just on a day-to-day basis, we're very active in sharing our interpretation of events through our website, through Facebook and Twitter. And then we'd like to talk to mayors and councillors from across the province, because they're always looking for solutions to these problems. So, we send out our newsletters regularly to let people know the story behind the story and a lot of the issues that are in the headlines.
How difficult has that been to explain to somebody the economic benefits of having a mine next door to your town?
Well, yeah, that's a great example. And just recently we saw in Kamloops, the First Nations there that came up with a determination that they say government should follow. We saw in Williams Lake with a new mine up there. We've seen how an issue like that can play all over the province, where we're having this activity, and there's going to be more like that in the northwest, and as parts of the center of the province are prospected further, we're for sure going to see more conflicts like that. So, one thing we like to emphasize is the need for transparency, especially companies that are early stage. There's no time that's too early to begin talking to local people. If a proposal is all put together and then the developers of it roll into town and say, okay, here we are, we got $100 zillion to invest and everyone should be thrilled with it. Well, there might be some people not thrilled with that. And, if you have an earlier consultation, I think it's a chance to build relationships. People in mining are very well aware of this. Recently I was out at the PDAC, Prospectors and Developers Conference in Toronto, and everyone was talking about these issues of engagement with the public, transparency. So I think that the mining industry is leading edge in recognizing this. But I think there's also lots of people who are wanting to learn more. And wherever I go, it's a talking point. Everyone just wants to jump into that discussion and find out about it.
Are Canadians in general people who want to get the facts?
Yes, they are. There's a weariness. What I'm calling it is the making it work attitude. A lot of people, they see the conflict, they see, maybe sometimes they see companies that are overreaching. They also see environmentalists that, recently Greenpeace was taken to task in a report because they had admitted that they are just making things up in some cases in order to get the public excited about an issue. Well, that's not honest and it's not fair. So I think we need to get, whether it's industry or those who are oppositional to mining development, we need to get them, I think, talking to each other more openly, more respectfully, and earlier. And that's a challenge for both sides.
Yes, and people probably aren't aware that Greenpeace had their tax-exempt status taken away because they're just a for-profit corporation.
Yeah, and I think we hear lately in the news all this about lobbyists and government and so on. And, one thing that we don't hear about, because they don't register, is that there are a lot of these groups. Some of them are funded by American foundations for reasons that we don't fully understand, that are competitive with Canadian firms, and they don't register, but they They meddle in our elections. They're buying radio time with advertising to try to, unseat this government or that government, whether it's provincial or federal. And, anyone else doing that would probably find themselves in hot water with the elections officials. But for some reason, there seems to be a group of these organizations that just feel they've got a license to do anything they like.
Are some of those groups oil companies in the Middle East funding films and documentaries that are anti-oil sands? Well,
we've seen evidence that the Russians have been influential in Europe in creating anti-fracking initiatives that would, cause competition for Russian natural gas exports to be curbed. And so, that's given a lot of people the thought that this could be happening in North America with the American-funded groups that are trying to shut down Canadian development. And I have to say I haven't seen the evidence to support that specifically, but I think a lot of people are suspicious of that. And whether it's the case or not, I think there could be, a nice effect from fresh air and light exposed on this. A little less secrecy from the environmental lobbyists as to where they get their funding from and why they get it, instead of these, vague lines that, grants, $1 million here, $1 million there. We don't know why. Why don't you want to tell us? I think it would be good for everybody if we did know, because everyone knows where the oil companies and mining companies get their money from. They get it from their shareholders.
Who supports your organization?
Well, we came together in 2014, funded by initially the foundation of the Business Council of BC, a number of companies, associations from all the different resource sectors got together to get us going. We have an independent board of some distinguished British Columbians who've got a lot of experience in public life and industry who guide us. And then we have a community advisory council. We're actually meeting this week, and they give us insight into what concerns are in different communities at the ground level so that we can focus our research. So we present ourselves as being an independent think tank that is examining these issues of importance.
Now, at PDAC in Toronto, did you get the feeling that the suits there, the bankers, are aware of how important mining and other natural resource extraction is to the Canadian economy?
Well, that was a major topic of discussion. And if you consider the fact that 24,000 people can come from 125 countries around the world to a Canadian city, spend the better part of a week meeting with each other, dining at the restaurants, that alone has got the impact, I imagine, of a mine or two over the whole course of a year, probably many mines. It's an amazing thing, and it's just a testament to the fact that Canada is the world leader in mining, because that was the biggest mining conference of its kind, biggest mining conference period in the world, and it happens in Canada. That's not the case with a lot of other industries or endeavors in life. Usually it's some other country that's the leader in it, but mining is one. I think 3 or 4 of our universities are in the top 10 of world mining educational institutions. UBC is one of those top 10. McGill's another. And in so many ways, our processes are wanted by others. I was talking with a delegation from India. The Deputy Minister of Mining for India was there, and I was asking him, why did you come here? And they told me that they want to learn about our regulations. They want to find about our approach to geological science. How do we develop the data and store the data and share the data that's used to understand and unlock the ore bodies beneath our feet? And, it's no simple thing to do that. The fact that we've been doing it so long and so well in Canada is really part of our national treasure. So it's intellectual. It's not just in the rocks.
Is this a Canadian trait for us to ignore our own expertise?
Yes. Well, isn't that always the way? Becoming famous abroad before you can be famous at home.
Stewart, can you tell us again about how people can find out more about the Resource Works Society?
Yes, absolutely. If you go to our website, resourceworks.com, we're constantly posting new material there that we write our original material. If you go to our Twitter feed, which is resource_works, every day through the day, we're following the developing news. We're putting our particular interpretation on it. We are sharing our view of the world through that. And then also we link to our Facebook page, which is also quite active. And, we're building up a community of interest. Anyone can sign up for our newsletters and get updated every couple of weeks on what's going on. I'd encourage people to do that. It's free. We don't rain junk mail on you. Just sign up for it and you get this nice newsletter every other Thursday.
Stewart, thank you so much for being on This Week in Money.
My pleasure, Jim. Thank you very much.
My guest has been Stewart Muir, Executive Director of the Resource Works Society, their website, resourceworks.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Bob Hoye, and Stewart Muir. And thank you for listening. If you have any questions for This Week in Money, you can email us at info@housestreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.